Thank you very much, everybody, for watching this evening. I want to bring you quite quickly through it and bring up some interesting developments we've had in the last month or two as our business has evolved rapidly. The disclaimer is naturally treat everything as said as forward-looking statements, and like all shares, treat with caution. Not going to dwell on this. Like, our model is acquire a number of business at a low multiple, preferably 10p in the pound, take out excess costs, turn them around, and seek an exit in relatively short term or transform the business. And what I'm saying here, I put the company together. I'm executive chairman. In both then we took it over, and in hVivo, the former CEO, we left in very good terms, but we felt our model is really slim the management team and bring out, rather than bringing in helicopter management teams, bring out the next layer. For instance, Andrew Catchpole has been with hVivo for 14 years. Brilliant guy. He knows more about challenge study trials than anybody will. And likewise with Venn, there's similar parties. So I'll not dwell on that. I'll get to the meat of one of the most exciting businesses ever I've been involved in, I think we have at the moment. What have we? We've now, in less than a year, created a niche CRO business. It's growing, and really importantly, it's a services business. It must and will be profitable very soon. It's a very high margin business, 30 to 40%, because we are the world leader in the testing of vaccines and antivirals. There's no use being a world leader in a small niche if you don't charge premiums. So 30, 40% margins, broad customer base, global pharma. We virtually every vaccine company in the world as customers, either currently, ongoing, or recently. Very importantly, we're not going to be a one-trick pony. Say we have a brilliant business built now, profitable challenge study business, but we're developing new revenue streams. The first one is, we'll talk in a few minutes, the antibody testing throughout the UK and Ireland. The second one is expanding the laboratory services. And the third blockbuster is basically the testing of COVID-19 vaccines around the world. So we're going to have 4 separate revenue streams. Any one of them is transformational, and any one of them is a company maker. And when I say company, any one on its own should be worth somewhere in the region of, who knows, 100 million. And then fifth one we're even talking about is we end up having 49% of Immutex, which we're cleaning up, strategic review, and that one, if we do it rightly, it also is a company maker. So we have about 4, 5 shots on goal. Any one of them will transform the company. We're substantial, and we have a rapidly growing pipeline. What have we got? We took over hVivo, we took over Venn. Being frank, we cleaned them up. Both were fabulous business, been in business for 25 years. Look at the customer list I have. The Janssen, Boehringer Ingelheim, Galapagos, DARPA, that's American Defense Research Organization, Merck, Gilead, Ipsen, Servier, all those people. Lots of ones we hear about the news every day. We're in the vaccine business primarily. And we do preclinical through Venn. The beauty about hVivo, our friend Uncle Neil Woodford put 113 million into it in the 5 years prior to us taking it over. We acquired it for 13, that's 10p in the pound. What do we get for that? We get a quarantine clinic, replacement value 25 million, an on-site virology laboratory, replacement value 10, and a world-leading portfolio of 25 million pounds worth of challenge studies. You need these to run the challenge study business. And we're now, they're really excited about our talk. We recently did a fundraise because we wanted to develop our own COVID-19 challenge studies, and we can then make them available to every COVID-19 developer in the world. So basically, 2 lovely businesses. They were both massively loss-making. As of now, operationally profitable in the coming months. And yeah, very excited what we've done. And really, there's been no rocket science. What are we? The fundraise, we raised 12 million the Friday week ago, at almost twice our fundraise we did in January. That puts us in a great situation now to avail of these opportunities, to fund our own challenge study model and to make them available. We could do 12 studies, each of them at 7 million. So why get a third party to fund them when we could get 80 to 100 million revenue from having our own challenge study models? The revenue reflects last year. Without anything to do with COVID, we now have a business that should turn over easily 30 million and be profitable. And we should be valued at 2 to 3 times that existing non-revenue. So at the moment, we're only valued as a non-COVID stock. We're very lucky. There's lots of people say they have a COVID story, but we've got 2 additional COVID lines that are again worth the value of the company, we believe. We've slimmed all offices. We got rid of 3-4 of our offices. We're back now to primary office in London, a very small slimmed down office in Paris, and one in Breda, Holland. Largest shareholders, myself, my co-founders. We still have over 20%. We're locked up for 3 years. I would have put in the guts now of over 2 million of my personal wealth, real cash in, and my other founders put it in. Our plan was put it together. I think it's probably been the best 2 million, which is a major part of it I'll ever see in my life, because I think the excitement that we've created is pretty interesting. Invesco 9.56. They've committed to stay with us for the journey. And then Link, the former Woodford Fund, 7.3. We've been assured recently that stake is in safe hands, so we no longer have any large substantial shareholders. And with our fundraise recently, we've got the who's who, multiple, very heavily oversubscribed by institutions. And the only mistake we did, we went with primary bid. We should have given a bit more to the retail. We want to look after retail. We give 500,000 to retail. It was hoovered up, and if we do it again, we'd certainly give more and make sure we want to look after our loyal retail followings. I'll come more to that in a minute. What we've done since the merger, our plan is not to hang around and waste time. We put the 2 businesses together. We've taken 2 million out of the hVIVO cost base since 17th of January. We took 3 million from the Venn cost base and a further 2.5. So basically, we're ripping the costs out. We've right-sized the management team. We've signed a 3.2 million RSV pilot study. It's followed on now, getting ready to do a 7 million study. That's 10 million in one major contract earlier this year. And bear in mind, these contracts have 30 to 40% margin. The next major contract was the 4th of May, another 3.5 RSV. We've 3 or 4 more of these same studies. So hopefully you can see with 25 or 30 million ongoing revenue, there's nothing to do with COVID. But then last thing, 11th of May, with the transformational COVID-19 testing business. I'll come to you in that. You'll see a lot of news that over the coming days, over the weekend, we're now live. Anybody who wants their antibodies tested, we're primarily going B2B to the business community in the Greater London and large employer groups. And let me come to you that, and you'll see clearly why we're saying it's transformational. What is a challenge study business? Look, basically, it's a way of testing vaccines in an innovative way. It's done in East London for the last 30 years. And basically, the real opportunity, we test lots of vaccines. So basically, this is a fabulous business. Without COVID, it's certainly worth its current value in market cap, because we now are the world leader testing vaccines, antivirals. However, we all know there's an awful lot of COVID vaccines to be tested. Most of them are not able to do phase 3 because the vaccine, the disease is not in community. So there's about 100 leading, or 100 COVID-19 vaccines developed around the world. There's only really about 20 serious players, and we know the names: Oxford, GSK, Sanofi, J&J, some of the Chinese ones. Of those 20 serious players, 12 are in discussion with us. You need a quarantine clinic. We can run them and test them, and we're proposing, we're using the fundraise primarily to build our own challenge model for COVID-19. Any one of those vaccine developers would fund that for us, but then we're stuck working with exclusively. Our plan is to sign up all 12 of them later this year at between 7 and 8 million per study. It takes 2 to 3 months. We can run them, 3 of them in parallel at the same time. So if we get this right, that is a 70 to 80 million piece of business that we can get 6 at the end of the summer, 6 early next year. So hopefully you understand, people wondering why we did the fundraise. That is a golden opportunity. So that's kind of what we're looking at in that one. So that's transformational number 1, doing the COVID-19 testing. There's nobody in the world has committed to develop a COVID-19 wild style challenge study, and we're the only people who can do it. So it's kind of a unique place to be in the world at the moment for hVIVO Open Orphan. I'm not going to dwell on this. This basically just tells you how to challenge study. All of this deck is on our website, and really it's just a novel way of doing a clinical trial and guaranteeing whether a vaccine works or not within a 68-week period. The next transformational one, the hVIVO laboratory services and testing capability. I say we don't want to be a one-trick pony. We want to have a business that's solid, profitable, growing, and have multiple revenue streams. In the past, hVIVO was dependent on a rickety single challenge study model concept. We now have multiple revenue streams, and the main one here is, first of all, we're expanding the lab. We need the lab, and that's you're confronted to run our challenge studies and our clinics. A lot of downtime, and we're driving a lot of revenue through that from third-party small biotech companies that don't have their own lab. We're getting a lot of demand, and you'll see a lot of revenue deals being announced in the coming weeks now. The really big one, we'd never have got the Quotient. There's 3, and there's room for us all. There's a Roche, the Abbott, and the Quotient. That's the only 3 test kits in the world that gives 100% efficacy or 100% accuracy. And even last week, the MHRA, the UK regulator, banned the use of the fingerprint test. So that has made the market even more attractive. I know people worrying what we're going to do, but we see this as a great opportunity and say, machine is in, and we're going live tomorrow, and we're open for business, and there is a lot of it there. Our good old genomic database, we're now populated with a lot of data. Orphan or hVIVO has one of the large infectious disease databases in Europe and the world of disease progression. That's going in there. So that makes it, that will be available, and we're open for business in the second half of the year on a subscription basis. The large pharma companies will pay to access that. Very important, fabulous leverage. I'm not going to go into that because I think people want to know about the deals, but look, we're well through the break-even point, and we know the business, everything comes in, is cash flow positive. Current trading, we have a very strong pipeline of revenues, and we've got a very good non-COVID, and then we have a lot of COVID work. And so I've used the comment, hVIVO ended up being a place you call COVID Central, and we basically have the non-COVID work, which builds a company and it's profitable, and all this additional COVID work is jam on it all, and it's coming in. So Venn is trading pretty well. We're making sure it's profitable, but the big upside of the business is the hVIVO business we acquired in London in January. Contract pipelines, when we took it over, we'd only 100 million. We've increased the hVIVO pipeline by 20%. That gives, and then is 10, so it's 110 million. Dark blue is non-COVID. So we're making it very clear, without COVID, if it disappeared tomorrow, lots of stocks ran up on COVID. We tried to curtail ours and are running back down. We believe we have a very profitable, attractive, exciting business that's non-COVID. But the sky blue stuff at the bottom, and most of it's coming into land, is we say it's sky blue because it's the COVID stuff. But look at that, the first one, substantial pipeline developed, the challenge studies, 35 to 70 million we could do this year. If, now the big if, can we get our COVID-19 challenge study? And I think we're getting there. It's a wild style. And also an attenuated virus we're doing. Third-party pharma COVID laboratory services, we put this at 5 to 10. That is starting to take shape rather well. Finally, the big one, we're hitting the ground running tomorrow, and we're getting a huge anticipated appetite for this, the rollout of the antibody testing with 10 to 30 million with maybe further upside in that. And basically, we're not competing with Roche, it's doing the NHS, but all the big employer groups in the UK are looking for on-demand, 24 turnaround, and that's the niche we're going for. And to be frank, it's getting Britain back to work. It's called the hVIVO COVID clear test, and getting Britain back to work. It allows employers to get them back to work. Prospect pipeline in excess of 160 million and growing. Not bored with this, but our coronavirus challenge study has put us right around the world, and has put a tiny little company really on the map. And we have now all the vaccine developers knocking on our door, rather than traditionally we had to go knocking in theirs. I'm going to skip that one. Very important to say the share price has performed really well, and we're very happy where we've got it. Say the founders are locked up for 36 months. We've Invesco and Link in. The post-merger share register, we flatlined for quite a while. Two of our largest shareholders, who were their legacy from hVIVO, were selling. When the last of them departed, you can see the share price corrected as of 5 weeks ago. Yes, there's a bit of movement in recent days, but I can assure you we've got plenty of news flow coming over the coming weeks and months as we really build this business out. Very importantly, another piece, and we say this transformational. On the right-hand side, we now have the cross-selling of the hVIVO and Breda, which is the Venn services, the data going to genomic database. But look what we discovered, and it's a bit like you take over a company down the left-hand side. This is what Uncle Neil left us. First of all, we have a 49% Immutex. That's the only one of the few phase 3 ready universal flu vaccine. It's also, you'll see in the Lancet in the coming weeks, I think it's going to probably be more like mid to late June at this stage, a phase 2 ready universal mosquito saliva vaccine. Our colleagues in the Seek Group of 51, we're looking at strategic review. Do we sell that entirely 100%? Do we vend it in a public company? But that is a very exciting asset to have. And I'll draw your attention to Merck acquired a very similar company, stage of development, everything is based in Vienna, called Tilmas. And all we can say, we don't know the exact price in merger market, quoted as somewhere between 100 million and 500 million. We believe it's more in the middle as where it was. We believe Immutex is a very similar company. And look, we've got a repurposed influenza immune modulator. We own 100% of that. And we also own 62% of Prep Pharma, which is a prophylactic expected utility for COVID-19. We're minded to put these three assets together, 100% of them, and listed. And all our shareholders through a dividend species will get a stake in that, because we believe hVIVO, Open Orphan, is a profitable services company with three different ways of substantial upside, but we're focused on profitable services. These three non-core assets are all products, and we're going to monetize them in the coming months. And whatever we get for them will be paid back to our shareholders through a dividend species, because we don't want to be sitting on assets and we don't want to be sitting in cash. Our job was to create as much value in a short period in time for all shareholders, and that would include ourselves. That kind of brings me to the appendix, and I'll just say here, we have a strategic review under these non-core assets with the view of monetizing them.
Cathal, thank you very much indeed. We've had a great deal of questions. Apologies if my sound isn't particularly clear, but the most important thing is you can hear our presenters. A great question came in really early on, and I'd like to start with that. And that's, what do you think is the most misunderstood thing about Open Orphan?
Not sure, actually. I know, look, what we did the fundraise out of the blue Friday week ago. People didn't expect it. But where we are at the moment, we're signing contracts with large pharma, top three. They'll be announced in the coming week. Within the next month, I think we'll probably sign contracts with 3 of the top 5 pharma companies in the world. We had 2 million, you'll see in our cash balances. Having 2 million frightens them, but now going forward with 12 million, we don't intend spending all of that money. So having that cash balances makes the likes of J&J, Pfizer, and people very comfortable doing business with us. They don't like dealing business. So I think there might have been misunderstanding. Our belief is we're going to take that money and we're going to use it very wisely. We're not going to blow it. And I think we can build a transformational business in a very short period of time with it.
And on that, you raised 12 million, and I think you made a comment that it was heavily oversubscribed, and certainly on the retail, and there was frustration about the retail element. Why didn't you, or could you have taken more? Why didn't you take more if you could have?
Yeah, look, we don't want to take too much. We made an allocation to our retail, who we really value, and the lifeblood of our company. We were advised that over 500,000 was enough. We did to primary bid. We were taken off our guard. We should have made 1 million available. There was even an appetite for a lot more than that. If we do it again, we'd absolutely make more available to retail. So that was that. But on the investor side, of the, let's say, the 11.5, that was all very, very large institutions. I've already made it clear it was multiple times oversubscribed. I don't think you'll see too much flipping in the coming weeks, because the institutions we've acquired are generally long-term holders. We did have major shareholders who we inherited from hVIVO sell out earlier this year. So I think from a retail perspective, we didn't want to have all the pressure on them as being supporting the company. So now we have a very good mix of long-term ourselves, who are locked in long-term holders, long-term institutional, and we have the ability for the retail now to play the game and come with us along in this journey. The journey, we're not going to fall in love with the company. We've always made it very clear. The idea of Open Orphan was put a number of companies together, fix them, not fall in love with them, keep the overheads very contained, and ultimately seek an exit within an appropriate period in time. We've always said the exit might be around 100 million. I think we're there, so we're certainly not selling for 100. And I think if we get any one of the 4 deal changes we have at the moment, any one of them could transform the value. And we say we've got 4 shots on goal on those.
And going on to you think you're open for business for testing tomorrow. Is that what you said? I'm not put words in your mouth. Do you have? You said you can get bring back working, getting focused on London and the South East initially, employer groups. So is that people like financial services, professional services firms, those sort of guys? Who are the target clients? Do you have people already in contract or agreements in place?
Yeah, look, we've made it clear there's nothing that we were opening for business this week. There's as effective tomorrow, we're good to go. Our machine can do 3,000 tests a day. That's 21,000 a week. That's 1 million a year. Our belief there's many of employers, particularly in the City of London, wants fortnightly multi-test done on all staff. There is two other equipment, Roche, they're doing NHS. The issue with NHS is employers can't come and get tests at will. People Joe Public can go in and get his test from occasionally, very occasionally, but won't get it. So the model we're going after is the employer grouping who wants to help bring the employees back. We think that's a very attractive market. It's a B2B, so if anybody wants to go through the GP networks, the private hospital networks, their clinics, or the employer grouping. So no, we're very excited about that section of the market.
Do you think there'd be demand for a second machine? And if so, would you be able to get access to it?
Yeah, look, we are hoping, but I think if you do the numbers, 3,000 tests a day, that's pretty good if we fill that. But absolutely, if we're getting a second machine, I think we won't have a problem getting one. We believe, look, Britain, if you think about the population, it's a huge country. There's room for an awful lot of testing capability. The big thing is the competition is not really Roche, it's not Abbott. Between the three of us, I genuinely think we'll struggle to meet the entire service in the UK population. The competition would have been the fingerprint tests, but anybody who watched Bad Blood, the Theranos story, will realize you cannot get positive tests for antibodies through a fingerprint test. And even they said MRJ, it was almost like this company. We've had a lot of lucky bounces. Yes, we're going to have a lot of unfortunate ones at some stage, but even last week, people who had looked and said, well, hang on, I get a fingerprint test for 80 to 100. But they cannot give 100% accuracy. And then last week, the regular MHRA came out and said they wanted those tests all banned because they cannot. The only way you can get 100% proof, have you antibodies not, is a full blood drug draw by a syringe, by a nurse or a doctor, and it's put on our machine, a Roche machine, or an Abbott. So no, we're really excited. It's a good place to be.
I appreciate you might not be able to go into specifics, but I feel as I must ask anyway because so many other people are. Are you able to give a final kind of per test price, and then also then from that what the open orphan revenue share, what your take on that, or the arrangement for that? Can you comment any more about that?
I think, look, it's pretty clear where the final prices are, or the people guess. These are high throughput tests. Unfortunately, with competition, but we can't say what they are, but there's lots of guessing online. I think they're not far off. Other than we say it is a very attractive business for us to be in. Roche are going to the NHS. It's a very, very different system that's trying to provide communities all over Britain. But we're going to a very, very different, a much higher margin. Citibank, JP Morgan, financial services, large construction companies, we see a ginormous market. And what they're paying for is the immediacy of the test. We've got arrangements in place across the UK with nursing groups who will collect blood, phlebotomy, and deliver it and get faster. So it's a very different, we're really servicing the business community who will pay a premium to have immediate understanding. And this is people who are a lot of employers we're talking to, want tests done on all the staff once a month. So you see the numbers. We've only a capability of 1 million tests a year. We won't be long filling that. That's all I would say.
And we've conscious of time, we've had a number of people ask about Immutex and any potential deal structure following a spin out or a sale, or what happens with that. I think you mentioned it last time you presented for us, but if you could remind us how you would foresee open orphan shareholders being treated, if you like, with that.
Yeah, Ron, good question. Look, we've said our model is clean up the company, make it profitable. That's a services company. Immutex, as per page 18 on our investor present on the website, the one in front of me at the moment, is a non-core asset. But the real thing in Immutex, it's similar company, is the Swiss company, the spelling of it, I just had write it down. It was acquired by Merck and it's Tilmus, and that was acquired in the past 10 days. And we go Merck's acquisition of Austrian Vienna-based Tilmus company. We don't know. They haven't said it. merger market says between 100 million and 500 million. We believe it's more in the center, or maybe a high center of that. We've said on our slide that we have a strategic review of Immutex. We want to monetize it. We own 49%. The SEEK Group 51. They likewise want to monetize it. So we're looking for either sell 100%. I said before, Novartis, you know where we are. Come and talk to us. When there's one acquisition done in the space by Merck, there's 7 other large vaccine companies who will follow suit. So our belief is there's a window for the next 3 or 4 months. We intend capitalizing whatever we get, and you can do your own slide rule what it's going to be. It's going to be returned to all shareholders through a dividend species. We're not going to sit in cash. We're fully cashed up. We've cashed the business as a service business, all these non-core assets. The other option would be to vend it in, vend 100% or 49% and the SEEK Group's 51 into a NASDAQ listed vehicle, along with 100% of that prep pharma company and 100%. And there we could have a company worth quite a few hundred million as well. So we're lucky position. We've got a number of options. We've just got to execute them in the next 2-3 months.
Okay, Cathal, thank you very much indeed for joining us this evening.